Welcome back to our channel. Today, we're diving into an important topic that every investor in Hong Kong should be aware of: the Hong Kong stock stamp duty. Whether you're a seasoned investor or just starting out, understanding this key aspect of stock trading is crucial for making informed decisions. So, let's get started. And if you like this video, drop a like and subscribe to Connect Dots channel for more business tips. Hello, we are Connect Dots Limited, a corporate service provider. Our experienced specialist serving many different entrepreneurs over the last decade is ready and here to provide comprehensive advice to you. We have the whole team here to manage your particular startup, company bank account opening and company maintenance needs, including registered office address, company secretary, and many more. The government proposed in the 2023 policy address to restore the stock stamp tax from 0.13% to 0.1%, with the goal of completing the legislative process by the end of November to bring Hong Kong's stock stamp tax back in line with the mainland. What is the difference between the new tax and the old tax? In addition to stamp duty, what are the charges for Hong Kong stock trading? How are other transaction costs calculated? This video will explain them one by one. When investors buy and sell stocks on the Hong Kong stock market, in addition to trading stock prices, the Hong Kong government also requires investors to pay stamp duty and a number of other payments. These include brokerage commissions, transaction levies, transaction fees, and trading system usage fees. Investors need to note that all of the above are part of the transaction costs and must be included before calculating the profit and loss of the transaction. However, in order to stimulate trading volume in the Hong Kong stock market, the securities and financial industries have begun to propose to the government to reduce Hong Kong stock stamp duty in the 2023-2024 policy address, or to change it to unilateral, that is, tax only on one of the buying or selling parties. After all, the stock market has the third highest stock stamp duty in the world. How high is the actual stamp duty on Hong Kong stock trading? Latest news. Policy Address 2023 lowers stock stamp duty from 0.13% to 0.1%. The government stated in the Policy Address 2023 that the stock stamp duty rate will be reduced from the current 0.13% paid by the buyer and seller based on the transaction amount to 0.1%, with the goal of completing the legislative process by the end of November. That is to say, the stock stamp tax rate will be restored to the level before August 1, 2021. Before the legislative process is completed, that is, before the target is November, the stock stamp tax will remain at 0.13% for both buyers and sellers. Do I need to pay tax when buying and selling stocks in Hong Kong? Although many investors don't pay much attention when buying and selling because the amounts involved are small, and many stock apps and brokerage firms continue to reduce brokerage commissions, you still have to pay stamp duty and various fees when buying stocks, which are all part of the transaction costs. And both the buyer and the seller have to pay a stamp duty of 0.13%. The stock stamp tax is a 0.1% stock stamp tax levied on both buyers and sellers for each transaction. Over the years, many voices have called for Hong Kong to be in line with the international market and hope to reduce the stock stamp tax. The Hong Kong government has considered many factors, including the frequent transactions in the stock market at that time. Due to factors, it was decided to increase the stock stamp tax from 0.1% to 0.13% starting from August 1, 2021. Revenue, Stamp Duty, Ordinance 2021. Starting from August 1, 2021, the stamp duty rate payable on transaction notes for the sale or purchase of Hong Kong securities will be increased. The current buyer and seller each pay 0.1% based on the transaction amount, adjusted to 0.13%. Fractions of $1 shall be counted as $1, and the stamp duty rate payable on certain other transfers of Hong Kong securities shall be increased accordingly. Comparison of stock stamp tax rates in various regions. In recent years, many stock apps have provided services for buying and selling stocks in China and Hong Kong and even US stocks, making it easier for individual investors to access stocks on major global exchanges. In fact, exchanges in most countries and regions levy stock stamp taxes. Only the United States does not levy stock stamp taxes. Compared with other markets, the stamp duty charged by the Hong Kong market is the third highest among major exchanges in the world. The UK will charge 0.5% stock stamp tax from the buyer, but not the seller. Followed by Singapore, the tax rate is 0.2%, which is also only collected from the buyer. While mainland China charges 0.1% stock stamp tax from the seller, but not the buyer. The United States does not collect stock stamp taxes from investors. If the stamp duty for one purchase and one sale is taken into account, only Hong Kong will collect it from the seller. Therefore, the actual stamp duty for buying and selling Hong Kong stocks is 0.26%. Calculated based on the entire transaction process of buying and selling, the highest fee is second only to the London Stock Exchange in the United Kingdom. Interestingly, just as the Hong Kong government announced an increase in stock stamp duties on February 24, the United States announced a reduction in stock transaction levies. The U.S. Securities and Exchange Commission, or SEC, announced that starting from February 25, the SEC stock selling fee will be reduced from 0.00221% to 0.00051%, further widening the gap in transaction costs between U.S. stocks and Hong Kong stocks. Other transaction costs. In addition to stamp duty, investors have to pay attention to other transaction costs to calculate their expenses for buying and selling stocks. Brokerage commission. From April 1, 2003, brokers will be free to negotiate commission fees with their clients. The transaction levy is effective from November 1, 2014. Buyers and sellers are required to pay a transaction levy of 0.0027% of each transaction amount, rounded to the nearest cent, to the Securities and Futures Commission. Transaction fee. The transaction fee means that both the buyer and seller must pay a transaction fee of 0.005% of each transaction amount, rounded to the nearest cent, to the exchange. As for the trading system usage fee, both buyers and sellers are required to pay a trading system usage fee of 50 cents per transaction. However, whether a broker will pass on the trading system usage fees to investors is a business decision, so most brokerages or stock apps will not charge trading system usage fees. Therefore, investors need to pay attention to stock stamp taxes in different regions, as everything is a transaction cost. How to calculate all transaction costs when buying stocks? After taking into account all transaction costs, the transaction costs per transaction are as follows. Share price x number of shares per lot x 0.1377% plus 0.5 Hong Kong dollars. Take the following X stock as an example. If you want to buy X stock with a price of 30 Hong Kong dollars, each lot is 1,000 shares, and the total value of one lot is 30,000 Hong Kong dollars. Taking into account taxes and transaction fees, the total transaction cost of a purchase is 41 Hong Kong dollars and 81 cents. To put it simply, even if it is the same stock, you must pay tax based on the transaction amount every time you buy or sell it in the stock market. Therefore, investors must calculate their transaction costs when conducting voting operations. After taking into account the costs, sometimes you may make a profit but actually lose it. Once you understand all the transaction costs, you will not have unclear losses. So, there you have it. A comprehensive overview of the Hong Kong stock stamp duty. By understanding the implications of this important tax, you can make more informed investment decisions and manage your costs effectively. Remember, staying up to date with any changes in the stamp duty regulations is crucial for navigating the stock market successfully in Hong Kong. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more informative content on investing in Hong Kong. Happy trading, and we'll see you in the next video.